Anand too joins in on the show right now, founder and CEO at IME Capital. Ashi, hi, afternoon. Ashi, pretty lackluster the past 1 year. How do you think the year ahead is going to pan out? And do you sense that there could be an earnings recovery and a meaningful of that in any of the sectors this earnings season?
Sure. Firstly, thanks so much for having me on the show, and early happy Diwali to all the viewers and to all of you at the studio. Um, yes, it has been a fairly lackluster year for the past year, and the reasons are quite clear. Growth has come down. There has been a lot of increased kind of uncertainty around what's happening around global trade, what Trump is going to do, etc. Our core view is that you're kind of likely to remain range bound until you start getting some clarity on these two core elements. One, the growth recovery and the growth rebound. We are going to be kind of very closely watching this kind of Q2 earnings season because a lot of people have a hope or a belief that you will see a recovery in the second half. We kind of watch corporate commentary very closely to kind of see how clear is that just general optimism or are there clear signs for that? You already had a few IT company results come out. They have been slightly better than expected. So I think this earnings season is going to be very important to kind of lay the foundation for market performance going forward. You also very, very clearly need some kind of clarity on what's happening on global trade. The US-India trade deal has been kind of is long waited. We still don't have any clarity on that. I think until you don't have these two core headwinds kind of being taken away, you are likely to see kind of markets a bit range bound. It's also probably good at some level because after COVID, you kind of seen a strong one-way movement to the markets, and you did need a certain amount of time for kind of valuations to correct. So our kind of view is if we can be looking forward for the next 1 year, we probably expect the next quarter to 6 months possibly to be a bit more range bound. But as you start getting clarity on these two core elements, we kind of believe you're laying the foundation for the next big move. And that's really what we're kind of waiting for.
And what's the best risk reward in this market, Ashi? Hi, this is Harsha. Good afternoon.
Harsha, hi. So I think, and we've been very clear on this. So I think the last couple of years, we are huge bulls on the whole digital ecosystem or digital disruption. So digitally native platform businesses, the like of an Eternal, the Swiggies, Paytms, PhonePe to be listed. This entire space, you are seeing a tremendous amount of value migration happening away from traditional businesses towards the space. We believe that very strong growth rates can continue well into the decade. And we're also very optimistic about the profitability of these business models as they kind of reach a stage of maturity. A combination of this very strong growth and a shift towards profitability, according to us, makes this hands down, at least for us, the theme to bet on over the kind of current decade. So at this current point in time, especially from investors with a longer term investment horizon, we keep believing that digital ecosystems is very, very attractive. I think from a slightly more shorter term perspective, we kind of seeing quite a lot of interesting value and also a bit of a growth recovery in both the banking space as well as consumer names.
Okay, and what do you avoid, Ashi, in a market like this where we've been sideways for a really long time, but yet valuations still don't look altogether comforting?
So I think the important areas to avoid, right? And a lot of people have been talking about a certain level of froth in small caps for the past year and a half. There are certain segments within this which may be a bit more frothy. I think you want to, especially in this kind of a market, stay away from anything which had moved very substantially over the last 2 or 3 years, where valuations are not very comforting. Large parts of the small cap space do actually hold there. The other core element is that any kind of company or sector where there is a large amount of dependence on US kind of as a market, I think this needs to be watched kind of a bit carefully because Trump is just a very difficult animal to predict. So far, we have had the negative impact in terms of manufacturing. At least it doesn't seem like this is going to move too significantly into pharma generic exports. He's already imposed some tariffs on kind of specialty exports. But I think pharma generic exports, IT services, some of these you just need to be a little watchful. But I think the place to kind of clearly avoid is probably overheated small caps, especially companies which aren't as well known without too much of a trading history, etc.
You have HDFC AMC's numbers flashing on your screen, viewers. That's, of course, for perspective. 16% higher on the revenue front where HDFC AMC is concerned. EBITDA up around 14 odd percent. Stock perked up 1.5% in trade as we speak. And of course, as we go by through this week, we'll start to see more and more earnings dominate, this time slot of our show. So you want to stay tuned and you want to stay on top of it. Net profit up 25% on a YOY basis for an HDFC AMC. Ashi, capital market plays, is that something that enthuses you? Does it excite you? Is it a longer term theme? And again, how does the risk reward, or what's the kind of margin of safety that you're seeing on some of these counters?
So I think capital markets is a very, very interesting longer term theme. It is something where we have a pretty decent level of exposure in our underlying portfolios as well, which reflects our kind of underlying view. India is still at very early stages of this probably multi-decadal financialization of savings theme. You have a significant amount of Indian wealth which is still stuck in bank fixed deposits, real estate, and gold. All of these can kind of move towards financial markets. Now, this could happen via mutual funds, it could happen via insurance, it could happen via direct equities. There are multiple elements, but there is a large value migration theme which is clearly at play here. We believe this is not just a 5-year, 3 or 5-year play, but it's kind of a 10, 20 years, a much longer term theme. Being capital markets is obviously going to be cyclicality in the nearer term, but I think from a longer term perspective, this looks exceedingly attractive. That said, I think when you're looking at capital markets, you really need to be looking at the sub-segments within capital markets because there are quite important kind of underlying trends happening in different segments. So asset management companies, right, and HDFC AMC just came out with the numbers and you can see they're quite positive. I think this is a theme which is looking really quite promising to us. Insurance as a space has underperformed over the last some amount of time. We find valuations quite attractive and the long-term growth trajectory is very clear. Your brokers are someone we're a little cautious about because SEBI is really cracking down quite significantly on the overall kind of F&O volumes. The longer-term impact of this, whether kind of business models or economics will need to be modified around, is still not very clear. We'd rather see some clarity before going aggressive on kind of brokerages. And I think wealth management is seeing some level of yield pressure or supply side kind of pressure around private bankers and their costs moving up, etc. So I think while capital markets as an overall theme is clearly very attractive from a longer term perspective, you do probably need to be a bit selective in terms of which segments within capital markets that you're focusing on.
Right. Okay, Ashi, great to have you on the show. Thank you so much for taking the time out and speaking with us today, and wish you and your entire team a very happy Diwali from all of us.